Hi everyone. Good evening, good day, wherever you are from. Tonight is another night or show with Mario. Hi Mario.
Hi, Joaquin. How are you doing?
I'm awesome. Thanks for coming on again and taking the time. Tonight we're going to talk about a really important topic and foundation for successful investing. And we're going to talk about, invest in what you know. So we're going to elaborate upon that. And if you're watching right now, feel free to drop your questions in the comment box. If you're watching this live, if you're watching this as a recorded version, feel free to drop your questions regardless, because we could maybe address them in a later show or bring them up in any other way or get in touch with you directly. Okay, Mario, invest in what you know. Why is this so important?
Yeah, it's really, really important, Joaquin, that people invest in what they know because uh, the most important is that you don't lose money. I actually want to quote Warren Buffett because he said that you should invest only in things you understand. Actually, he has two rules or that he mentioned many times. Some people who is normally on this investment world may know, but this rule number one: never lose money, and rule number two: never forget rule number one. If you invest in something that you don't know, you will probably end losing all your money because uh, it came to my mind as well, something that I learned as well, that you should be able to explain um, any investment that you decided that you want to do in a way that your grandmother can understand. This is kind of a test that you should, if I'm going to talk to you about an investment, I should be able to explain it to you in a way that you really could understand it, but also that my grandmother can understand it, because it has to be simple. If you don't understand the type of investment you are going to do, you should not go for that. Are you with me on that, Joaquin?
Yeah, I totally resonate. And wow, I never heard someone say like you should have to explain your investments to your grandmother, but it makes sense. And a successful investor named Peter Lynch, he's saying that if you imagine yourself walking down a street in downtown in your city, you're gonna walk past a lot of stores and brands, and you might know some of these brands, or maybe you have some favorite brands that you usually go and shop products from online. And why would maybe these brands and shops be a great idea to start with when you're looking at possible investments? Is because if you are a regular customer of theirs, you probably understand like the products, when their new products are coming out, how they make money. Yeah, like you probably have some insights about this business that you can take advantage of, and that means you're understanding what you invest in. We want to take it a little bit further at Catching Secrets. We have some guidelines, etc., to like look into what's going on with the business, etc. What are some key, we call it fundamentals. It's fundamental analysis. So it comes back to, yeah, understanding what you invest in, being able to explain it to someone, because that's actually the best thing to learn anything. It's by teaching others it. So I found that is a really good rule of thumb there. To If you can explain to your grandmother, then you probably understood what you're investing in.
Exactly, exactly. I think it's really, really important that you understand yourself, uh, because it's your money. You don't want to lose your money. You don't want to risk. Uh, but of course, when you are ready to invest, you should know as well that you should invest money that you can lose. Even we don't want to lose money. No one wants to lose money, but you, in the process of learning, may lose some money. So I think it's quite important that you first need to cover like some I will say, some safety nets, some money that you will never touch, and you keep it there as your security. And then it's kind of, then you are ready for investment. And when you are ready for investment, then you should focus on what you know. And if you don't know, you need to prepare yourself. You need to actually start a path for going and learning about the type of investment you want to do. If you want to invest in real estate, then you have to dedicate some months, some maybe years to learn it, how you want to invest in that. If you want to invest in the stock market, or if you want to invest in crypto, whatever you want to do, you need to specialize. And that's quite important. That's a I love the topic when you told me, Mario, Ken, let's talk about a little bit about you should invest in things that you know. I mean, I would like to open a business, and then uh, invest money on a business is something that I really know and like. I don't want to open a business or invest in a business that I don't understand. Uh, Simple as that.
Yeah.
When you were talking about Peter Lynch, um, this is something very important and very key, because he also say, one of his quotes, I can just read it. He say, if you can find an attractive company to invest in, keep the money in the bank until you discover it. And that's very important, because some people just want, okay, I have some extra money, I want to invest. No, stop. To have money in the bank is okay, not for a long time, not waiting until you get some depreciation or inflation and make the work, but you need to have it there until you find the right investment for you. And I support this quote of Peter Lynch, because it resonates within me as well. There is many investment rules I can mention to you in connection with invest in what you know, but
Yeah,
following like,
but
yeah,
I want to comment
yeah,
on
yeah,
that quote with um, if you have money, or if you can't find anything to invest in right now, keep your money on the side until you find the right investment. So I support that in terms of not letting your emotions suddenly control you. So I too have funds available that I could invest right now, but I reserve them for the right opportunity. So I'm not saying there's any perfect opportunity, but the thing is, I found some opportunities that I want to invest in, but it's not the right time right now. So I gotta wait for right conditions for me to go in. So the money is currently sitting in the account, ready to be invested whenever the opportunity is right. So it's about having funds available so we can invest it when the opportunity is right, and not to save them, because you also mentioned inflation. That is why we are catching secrets and teach people and give them the confidence to actually put their money into the stock market and crypto. Because with inflation, yeah, just imagine inflation. If you're not familiar with inflation, it's like your shopping cart at the grocery store, at the supermarket. 20 years ago, you could fill it up with, let's say, 20 euro with different kind of products. Today, you will only get a fraction of that cart filled up with the same 20 euro. That's inflation. So yeah, don't just put your money in the market because, or into an investment because you have the funds there. You got to research. You got to research what you're investing in, and because that's going to take down the risk. Because I saw in the notes when we prepared and exchanged some notes for this meeting, you wrote down that risk comes from not knowing what you're doing. And that is what this is all about, is understanding it. Research the business.
yes. And I actually can go even a little bit deeper on that,
Wow.
because you have, yeah, if I have to add a little bit, is that you need to actually, when you are preparing yourself, I mean, because you should invest in what you know, you have to follow a philosophy and also a system. We have talked about in the past about that, but I just want to reinforce that because it is very important that you create your own investment philosophy and system. And of course, the time will come when you will be able to invest. But as you were saying, you have the money in the bank for some time until the right opportunity. But this right opportunity or this right time, it will come following a system that you already have also
Mhm.
created, because it's kind of, you have to do the homework, you have to do your course, you have to, and that's something that actually also goes with a quote from Peter Lynch that says that investing is fun. It may be fun. Well, I'm paraphrasing here, but as Peter Lynch will say, investing is fun, exciting, but dangerous if you don't do any work. In this case, is if you have not made the homework to learn about the type of investment.
Yeah, so
Exactly.
it's fun, exciting, and dangerous if you don't do any work, right?
Exactly.
Yeah,
Exactly.
so that's it comes back to, if you haven't done the research, if you don't understand what you're investing in, then you're risking all your money and it's just gambling.
Yeah.
But gambling, there are specific places for gambling. We call them casinos.
Yeah, that's correct. That's correct. Yeah, but it's good that we take these topics and we try to create, like make the people reflect on the importance of it's not just invest because of invest. Is you really need to go and invest in things that you first know, or and also that you like. I will add not only things that you know, but things that you like as well. Mm.
And at Catching Seekers, what we do is, we have a strategy, and that is exactly what invest in what you understand. It's knowing like what to do and when to do it. So it's about finding companies that are solid. So it's finding, what we like to invest in is broken stocks, but not broken companies. And let me explain that. So as so companies, they are big companies that represent on the stock market, and they have a price. That's the stock price. So we like to invest in broken stocks, broken stock prices. That means when the price is lower. And you probably have the same philosophy regarding shopping online. When your favorite store has a sale, people usually run to the store and they buy all they can because products are on sale. It's the same with the stock market. When the price had dropped, the stock market is on sale, because what we also know from history is they're going to bounce back. But the key here is that the company that we invest in must be solid. The price might be broken, but the company is solid. And how do we know that the company is solid? We investigate. We understand how the company makes money. We understand why the price is low right now. That might just because the CEO, the founder of the company, or someone else, they announce something that is someone interprets as bad news. And a concrete example that is Intel. It's the computer chip manufacturer. So they produce chips for the electronic devices like your laptop, desktop, etc. And last summer, they announced that they're gonna postpone the next generation technology. And in their market, there are two big players. It's Intel and it's AMD. So when Intel announced they're going to postpone the next generation technology, that is bad news. It can give their competitor head start. So the price drops, but it doesn't mean that anything has changed with the company. Intel is still a global actor. It's still a solid company.
Yeah.
So that is some key insights on understand what you invest in, because nothing has changed with the company overnight just because of a news announcement. But the price dropped, and suddenly we have sale. There's a sale in the stock market.
Agree with you, Joaquin, 100% on that part. Like the most important and people who is dedicated to, for example, invest in the stock market, need to spend quite a lot of time reading books and then understanding how the stock market work, understanding the graph, everything that they need to look, and of course, learning how to make a fundamental analysis or also a technical analysis, company by company they are choosing. And this is something that takes time. So if you are eager to invest in the stock market, you can follow, for example, fundamental as you do on catching secrets, but you need to also study more because it's important that you prepare to understanding and to pick the right companies. As you say, companies are strong, but can have opportunities when they, take decisions that may postpone or make delay something, and the shares can drop, and
Yeah,
that's sale. I go to the store, as you say, and you have to take advantage of that, but you need to follow a plan.
yeah,
Yeah, for that, and respect also this plan and this system that you have created. You have to look also in a long-term view. I
yeah.
will suggest always in kind of looking in a long-term, you in order for do these investments.
Before we dig into the long term view, I would love to comment on it requires a lot of time to learn the stock market, if it's okay. And
Yes.
thanks. And yeah, it requires some study. There is no magic bullet, there is no holy grail regarding the stock market. You have to invest in yourself and understand some key concepts. However, what I found a little bit amazing as well is that I've been able to make consistent profits without any degree in finance or economy. So by by investing, yeah, if you can set aside like 4 to 5 hours over the course of a couple of months, for example, what we do in our course, then you get what you need. So you just need to learn some key concepts, and that's it. There's no need for long education, etc. So yeah, just learning a strategy, as you now moved into, of learning a proven strategy which you commit to following, so you agree on the rules before doing any investing. Yeah, then you're set. So I just want to elaborate upon that. Yeah, a lot of time that's relative. It's is not that big of a job. You just need to learn a proven strategy, and that can be done within a few hours. Actually, that's my experience.
Yeah, I what can I say, Joaquin? I know you have assistant, and that's very good because that help people to point it in a direction. And if they follow and they are consistent, they will probably get a result. But if the people even want to go even deeper, then they can, of course, dedicate more time.
There
But
is a never end.
basically, the most important is that it's a never end. Yes, it's a never end, and all depend uh, in how much time do you have. Of course, first that's important because normally we don't have all the time. If you are going to be an active investor, you will need a lot of time to be there. But if you want to invest in a semi-active, not all the time there, of course, following this is the best way
Yeah.
to start. I will say, and to learn and to start making things
Yeah,
happen.
and maybe we should spend a couple of minutes on the long-term horizon. That's a really important perspective you brought up. Thank you for that.
Yes.
We should spend the last minutes on that before we wrap it up.
Yeah, what I mean with this long horizon, because we have a stock market that give us the possibility, as Joaquin say, go with some fundamentals, some strategies, and go and invest in stocks. But also there is possibilities to invest in the stock market with a long horizon, which is
Mm.
maybe go for ETF or which is mean exchange trade funds, or buying a bucket with a lot of things and then keeping there for even for 10 years. I will say, when I'm talking a long horizon, I always look at 10 years from now for start saving money for either your retirement or for your kids, for the whatever you decide. But yeah, but that's also something good to mention as well. But the most important and what has bring us here today, and thank you for the invitation, Joaquin. I think we will continue doing at least once a week, which is these conversations, which are very powerful, talking about investment and finance and um, yeah, personal finance and in general, because it's important to try to elevate this financial education or about all of these concepts
Yeah.
and invest in just for going back to the subject that you should invest in what you know. That's what we open this room to tonight. And for that you should really study and prepare and follow one system or your own system in this case, but you should learn and you should know about, should be able to explain to your grandmother as well the investment you are doing. I don't think it will be easy to explain some things, but of course, then you have to learn it well.
Thanks for wrapping up with some key insights and yeah, the most important things we talked about today. And there are many topics we could continue when we with in the next session, because yeah, definitely we're gonna have a next session, and we talked about doing this once a month, right?
Yes, and
So
every last Sunday, so people can point and look for us.
yeah,
Probably. Mm.
so in about a month, you will see us live again, and there are some key things we could talk about here. I'm not a big fan of funds, so we could maybe talk about the dark side of compounding. We could elaborate upon a long-term horizon. Yeah, there are some key things and more insights that I know Mario and myself we can bring on the table for you. You could also let me
Definitely,
know in the
definitely, and that's good that we can talk about different things. I like that, and also that's just make it yeah, like bigger, the expands all the possibilities. Um, Yeah, last but not least, I would love to see if you can collect comments or questions from the people who is uh, seeing this even after. I will also try to do the same when I post it on my social media, and then we can try to answer questions. Let's bring questions, people who is listening to us. Yeah.
that's an awesome idea. So, guys, if you heard Mario, put your questions and comments in posts, tag us so we get notified, so we can answer your questions on these live sessions. That
Will
would,
be idea.
yeah.
Hmm.
Okay. So, thank you, Mario. It was awesome. And stay happy, stay safe.
Thank you, Joaquin. Stay safe as well on these times. Yes, good to see you.
Okay. Thanks for tuning in, guys. We'll see you anytime soon. And myself and Mario, we will be live in a month, the last Sunday of April. The time and the event will be announced. So stay tuned. Take care.